Good afternoon, everybody. It's Paul here for the next in the Admiral Markets Mastering the Forex Trading webinar series. Here we are. It is 3rd of December 2018. It's session 18. My name is Paul Wallace. I'm a trader analyst and coach. Before we dig into today's session, as always, I'll just start with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group, investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with the maximum payout of £50,000 sterling as per our negative balance protection policy. There are many good reasons to use Admiral Markets as your primary broker. They offer excellent spreads, tight spreads on DAX 30 and Euro-Dollar during the main trading hours. And they also offer the Admiral Markets MetaTrade Supreme Edition for both MT4 and MT5. If you'd like to know more, please get in touch with your account representative. And Admiral Markets is one world, but with a global offer. And we appreciate that you will have, we have lots of global audience here joining us from all over the world for our sessions. And so please get in touch with your account representative who will be able to guide you with the correct regulatory environment. So, ladies and gentlemen, as always, I describe myself as a discretionary-based method trader, primarily looking to dominantly trade swings. Simplicity is very key, it's important to me, and I make my decisions based on a mixture of fundamentals, technical, sentiment, and geopolitical events, primarily FX and indices and commodities markets, where my philosophy is to buy strength and sell weakness. Primarily, I will use pullbacks for entries, though I will trade occasional breakouts. And next year, in the ongoing series, I'll be talking more about intraday trading, where I'm primarily a mean reversion trader. So that gives you a little bit of insight into me. As always, I'd like to set the expectations for our sessions. I would appreciate today that I may hear I'm carrying a little bit of a head cold, so I sound a little bit gruffer than normally. But hope that doesn't detract too much. But as always, my expectations for the session are for me to educate you about the Forex of trading, so that you're able to go away and analyze any market, be ready to trade it, and also help you raise your self-awareness about managing risk and yourself. For yourselves, as always, I appreciate we have a broad range of experience in the room, that we're operating under time limitations, which means we can't always go into topics with particular depth. So we always try and focus on tools or techniques or behaviors or rules that you can use tomorrow in your own trading. So what is the Forex of trading? Well, over years of trading myself and for funds and for working with traders from brand new beginning traders up to sort of experienced traders up to tier 1 institutions, what we've seen and learned is that the traders who do well consistently tend to have a good handle and complete mastery of the 4 M's of trading. What are those 4 M's? It's markets, method, money, and myself. Those are the 4 areas we're going to be covering throughout this Admiral Markets webinar series. Today, we're going to go a little bit different. For the last couple of months, we've been focusing primarily on markets and method, but today we're going to talk primarily about myself, and I'm going to explain why, what's the relevance to that as we go through. But then over the next few sessions, we're also going to be focusing on the money side as well. So throughout a series of sessions, we're going to be covering all of those four ends of trading, with the idea of being able to help educate you and raise your self-awareness about how to operate within those four ends. So, ladies and gentlemen, as I said, we're going to take a little bit of a tangent today, and I thought we would do that because it's very relevant, because I'm going to talk about my own personal experience recently, and I think that's great for me to be able to share that with you. It helps to give you an idea that we're all human, we all have similar experiences, regardless of whether you've been trading for 2 weeks or 2 decades. So, in the work that I do coaching traders, the question that I often get asked is, when does your phone ring, Paul? Okay, when do people pick up the phone and actually call you to ask for help and support? The reality is that when people are doing well, they tend not to call me. Some traders do, because they know they're doing well and they want me to help keep them in that good space. But the truth of the matter is that the majority of times my phone goes is when actually people are having a few challenges in their trading. It's because somewhere within those four ends of trading, they're struggling. There's been a breakdown for whatever reason. They're having a few struggles, and they're actually, of course, they're committed and dedicated to sort of changing that, to actually sort of turning it around, and that's what they look to me to help them with. Very often what happens is that people are a little bit frustrated, and they call me, and actually what they're looking for is revolution. They just want to ditch everything they've done in the past. They just want to start afresh. They want to ditch the trading strategy or their markets that they've been trading, or maybe the risk management policy that they've been using, or they've actually just not been managing themselves, and actually they just want a complete revolution. And actually, part of the work is between myself and the trader as a trading team is to actually work out, what have they been doing well? What are areas that haven't been serving them? And what have they been doing that actually just needs an area of development? And so it becomes very often, for the most part, more about evolution than revolution. It's about sort of, taking a good snapshot of where you are and then working towards evolving to your next level as a trader. But what we realize is, or what those traders realize is, that their biggest challenge is that they can't see the wood for the trees. Okay, they're so caught up in quite often in just sort of trying to chase the tail on a brand new trading strategy, or they just are out of sync with the market environment they're in, or that they're actually sort of executing poor risk management, that they have lost perspective. Okay, they've lost perspective. In particular, what we find quite a lot is that, especially for private traders, they are over trading. Okay, they're over trading, and they're trying to trade through particularly tough or challenging life experiences. And with that in mind, by being able to make them aware of that, which is what we're going to talk about for the next few slides, I'm hoping that you'll be able to sort of see and understand that where perhaps you may have had challenges in your own trading in the past, and be able to link them to sort of experiences that might be going in your wider life. Because generally what we find is that traders think that they trade in a silo, especially men as well, it has to be said, is that we think that whatever's going on in the rest of our lives has no implication upon our trading performance. And I'm here to tell you that it does. And so there's a few things that we can do to actually help ourselves with our trading, to actually just make sure that we keep ourselves in a good space. Part of what I talk about with traders is about having what we can term here as maybe a common sense exit, or a psychological stop loss, or an emotional stop loss. You can call it what you label it as you wish. There are times and events that go on in our lives where actually trying to trade through them is normally quite detrimental. So, one of those particular areas is, if you have a family, is when you might have a child is born, because that will just change the complete dynamics, complete energy of, of how you're living your life. And that will take time to adjust. That will take time to sort of, get used to that. Your trading is probably going to be deprioritized, as of course you prioritize, your care and energy towards the new arrival. On the flip side of that, that also has an impact when a significant person passes away. Okay, so when that happens, that will have a traumatic effect. It will have an impact upon you, and it's actually best at a time to sort of put your trading onto hold. So, for example, I'm happy to share with yourselves is that actually I have been on what I would call an emotional stop loss on my trading for about the last 2.5 weeks because I found out that two of my friends passed away, which is why I wasn't able to deliver the session last week because I was away going to attend both of their funerals. So when events like that happen, it comes as a bit of a shock. It causes you a little bit of a bit of pain, a bit of trauma if it's particularly someone particularly close. And actually just trying to sort of trade through it invariably never ends well. And I can talk of particular tales of work I've done on an institutional level whereby traders who have been sort of, let's say, carrying the burden of the pain of the passing of a significant person in their life has tried to take it out on the markets. They've been seeking vengeance and they've been trying to take that out on the market, and invariably that never ends well. So, if you know yourself, and I appreciate, we have a broad range of experience of traders in here. Okay, we've got sort of, young people and mature people. But, just if you think that you can sort of trade through such events and that they will have an impact upon your trading decisions, I'm sorry to tell you that that is not the case. Okay, that they will actually have a huge impact upon you. So do yourself a favour, all right? If you're going through either of those things, then make sure that you actually put yourself on an emotional stop loss. Don't worry about missing out on the trades, okay? Markets were here before we were born. Markets will be here long after we're gone, okay? If you miss a couple of weeks, that's okay. The markets will still be here. So there's a couple of common sense exits we can take on board. There are, of course, a couple of others, a couple of other experiences that we should be aware of and actually just either sort of stop our trading or dial down our risk exposure when going through when they sort of appear on the timeline. Excuse me. So, as I said, if you're going through something like a divorce or a separation, that could be with your primary partner. That could be perhaps difficulties in your wider family or with friends. If you're going through that and think that won't have an impact upon your trading, well then I can assure you that is not the case. Quite often hear stories of traders who've had a disagreement or an argument with their partner the night before. They don't sleep very well because they've been mulling it over in their mind. They're a little bit angry still the next morning, and then of course they bring that anger to their trading, and then they tend to actually just trade very poorly for that first session because they're just not in a happy place. And invariably what it does is it opens up a sort of, let's say, a trench within which revenge trading will leap out and rear its ugly head at you. So if you're going through a divorce or a separation, or even just had a bit of a let's say late night discussions with your primary partner, then I would suggest that actually you perhaps give trading a miss the next day, because invariably you'll be a little bit out of balance, a little bit out of kilter, and that will have an instant impact upon your trading decisions. So another area where we need to have a bit of a psychological stop loss is when you move home or office. Anybody who's moved home will know that it's a pretty stressful and quite traumatic experience. And so, when you're doing that, you're moving into a new place, you're unsettled, then, trying to sort of trade through that, it invariably never ends well. Okay, it never ends well. Invariably we're just uncomfortable, we're a little bit uncontent, and then what happens is we make poor decisions. So when you're moving home or moving office, just put give yourself a time window to invariably to do that, to focus on moving home and office, and focus on getting yourself set up and started, and just making sure that you're in a good comfort place, that your setup is all correct before you re-engage with markets. That's our general advice to yourself. Okay, just get that done, get it done properly before you actually look to set up and trade in your new environment. The next one, which is very useful, and happens to all, especially if you're an intraday trader, is when you're feeling psychologically exhausted or burnt out. Right? When you're feeling like that, then trying to trade through it, okay, is invariably not the best decision. What we have to remember is that trading is a performance activity. What do I mean by that? Is that you get paid to perform well as a trader. You get paid to trade well. It's not like a normal job where you're putting in 40 hours, 9 to 5, Monday to Friday every week. You are paid to perform well. And if you are psychologically exhausted or burnt out, you will not perform well. So how can you see that? How can you identify that? Well, just keep an eye out for little things that will give you the hint that you are exhausted or burnt out. Simple things like not completing your paperwork, not sort of writing in your journal, things like that will give you an indication that you're getting tired and burnt out. Elements like just if you have, let's say, a mechanical trading system, you just sort of going through the sort of the trade plan unconsciously, not really engaged. You're trading passively rather than actively. You're just literally going through the numbers. You're just not engaged with the process of trading. That in itself is telling you that you're exhausted and burnt out, that you need a break. And as you'll find, I'll sort of talk to everybody about this. What I've found over the years from my own personal experience and also from my experience of working with traders is that, if I can sum it up very simply, it is that prevention is better than cure. Okay, prevention is better than cure. And what I know will happen is everybody will take on board what I say here, and then ignore it, and then they'll experience some of the pain from it, and then realise, yes, I wish I'd listened to Paul, and actually he's right. Prevention is better than cure. Okay. So, markets will always be here, right? Markets will always be. If you have to take a day or a week or a month away to deal with these, that is what you do. Prevention is better than cure. And yeah, one of the other things is if you're on holiday, if you're on a business trip and cannot really sort of give the market the respect it deserves. Very often, I think this book basically comes down to humans, okay, thinking that we are better at multitasking than we actually are. We like to think we're really good at multitasking. The reality is that we're actually not very good. We're not anywhere near as good as we think we are. And what we've just talked about is being exhausted and burnt out. And so the truth is, if you're on holiday, be on holiday. That might sound very simplistic, but it's the truth. When you're on holiday, be on holiday. Close the business down, close your positions down, go and sit, be on holiday. Just take yourself away from markets and trading. You'll need that once or twice a year just to basically refresh yourself. Okay. Remember, prevention is better than cure. And as I said, when you're on a business trip, you can't really follow the market. That's a case of just focus on your business trip. Okay. Focus on doing that well. There are still things you can be doing for your trading business, like working on your trading plan, making sure all your journals and your spreadsheets and data is up to date. Just making sure that your processes are tight and congruent with who you are. There's still work you can be doing on your trading business without you actually having to sort of actively pull the trigger on trades. So, as I said, you might listen to that and you may not sort of agree with it. You might be saying, well, Paul, I'm a superman. I can trade through anything. Look at me. I can, beat my chest and sit at my desk and I can trade 100 hours a week. And regardless of what's going on in the world, I can always trade. And, you might be able to, but I assure you it will catch up with you. I assure you, and so as I said, that's when my phone rings, when people think they can over multitask. They think they don't need breaks. They think that they can trade all day, every day. They think that they can just trade through, really, important life events. But it catches up with you. And so if you won't listen to me, then at least learn from a true market wizard. Paul Tudor Jones is one of my professional heroes. You should see him in the Market Wizards book. An immensely well-known, capable and successful trader. There's a great quote here from him. Macro trading requires a high degree of skill, focus, and repetition. Life events such as birth, divorce, death of a loved one, and other emotional highs and lows are obstacles to success in this specific field of finance. So just do yourself a favor, take that screenshot, print it out, stick it up on your trading wall in front of you, okay? Because if Paul Tudor Jones is giving you advice like that, then I guarantee you that it's worth listening to, okay? As I said, remember what I said, prevention is better than cure. Even if that's the only thing you take away from this this today's session, prevention is better than cure, I would be very, very happy with that. So there we go, a little bit on the sort of mastering myself. That's the fourth M there about mastering myself. As I said, it's quite relevant to me because I've had to have a stop loss myself for the last couple of weeks because of events that have been going on in my life, and because I realised that that is the best way for me to deal with it, to deal with what's in front of me and not trying to sort of trade in through or around it, because that just invariably never really ends too well. So I thought, for the rest of today's session, what we'll do is just a very, very quick recap on some of the, let's say, the higher points, and then maybe we'll have a look at a chart or two just to finish off for the last few minutes. So if you remember, what I talked about is having processes, about embedding the correct behavior. Things that can help us do that is by following just a simple checklist, a simple routine every time we open a chart. Step 1, define levels of support and resistance. Step 2, define if there's a trend. Step 3, see how price reacts at key support resistance levels. Step 4, look for price action signals at support resistance levels. Step 5, is it part of a bigger chart pattern? I say this every week, and the reason is because the more you hear it from me, the more it embeds in it, the more it becomes just your natural, excuse me, the more it becomes just your natural way to trade. And that's what I'm looking for you to achieve, that it just becomes your natural routine to actually to do that whenever you open a chart. And as I said, I don't care whether you trade gold on the monthly, whether you trade Bitcoin on the 5-minute chart, whether you trade Eurodollar on the 4-hour chart. It's about getting yourself into a good routine, and that is what actually will help you engage markets in a consistent manner. And that is the thing that will actually help you the most as you evolve and develop as a trader. So remember, step 1, define levels of support resistance. Look at monthly, weekly, and daily charts. Draw in those horizontal levels of support and resistance. And we can also add in psychological randoms that we'll see. And you can also use fractals to help. Remember, and we covered that in sort of session 2 and 3. So by all means, tap into the archives on the Admiral Markets YouTube channels, and you'll find that they're there to be used. Second one, the right, step 2, find if there's a trend. Can you identify whether an instrument is trending or consolidating? That's what we're looking to achieve, okay? Very, very simple. I say it every week. It should be very easy to look at a chart and see whether a market is going sideways, consolidating, or it's in a nice trend. Markets don't tend to trend as often as we would like. Most of the time they spend either consolidating or just being very scruffy. Okay, but it's a case of you need to be able to identify which is the particular one that we're which environment are we in. To help you with that, we've said you can use moving averages. We have done that in the past. You'll see me use a blue 20 period, a red 50, and a green 200. Simple moving averages, just using them to identify trends, strength of trends, and particular areas of dynamic support and resistance. Step 3 was about how to wait and see how price reacts at those key support and resistance levels, because what we're looking for generally is a confluence of events. That's what we're looking for. We're looking for somewhere between 2 to 5 things to come and happen at a particular time and place, and that is where we want to do our business in the market. Very simply, when markets are bullish, you want to be a buyer. When markets are bearish, you want to be a seller. Define the trend and trade with it for the moment. No trend, no trade, no signal, no trade. And that is very, very simple. So then if you remember, what we've done over the last couple of months is actually looking at step 4, which is looking for, particular price action signals at specific support and resistance levels. And if you go back through the archive, we've covered probably about 6 or 7 different types of price action signals that you could use as a way and a means to engage with markets and actually trade. So there you go. We've covered a lot on markets and method over the last couple of months. Today, we've done a bit on mastering myself in terms of thinking about psychological stop losses. Okay, common sense exits for when market comes at you sideways, because that happens to everyone. No one is immune from that. All right, and the more you're aware of it beforehand, the more you're in a position to actually engage and follow the correct processes and behaviors in your own trading business. So if you remember, what we've been talking about is, we're getting towards, slowly but surely shifting away from sort of the slides towards wanting to look more at the charts. We're going to look at, the major FX pairs, which is just making sure we look at the dollar index, and then also look at, all those kind of majors, right? Sterling, euro, Swiss franc, US dollar, Japanese yen, Aussie dollar, Kiwi dollar, and Canadian dollar. Just being able to sort of see them and start to look at how they operate as currencies and as cross pairs. We also want to take a look at the big major indices. That's what we're interested to see. Okay, the Americans, the European, and the Far East, to give us a good insight into what's happening in those markets. have a little look at some of the major commodities like oil, gold, and silver. We can always take an interesting look at some of the big American equities that we have there, okay, the FANGs, and also you can have an interesting look at the cryptos, Bitcoin, Ethereum, Litecoin, Ripple, etc. There's plenty of there across that to give us interesting things to look at and find possible trading opportunities. So remember, ladies and gentlemen, I talk about it every week. Remember to manage those 4 M's of trading: markets, methods, money, and myself. Are all of yours in alignment? Okay, if they are, fantastic. If they're not, then perhaps you shouldn't expect, to be doing like as well as Paul Tudor Jones. It's about monitoring those 4 areas and keeping yourself on top of them. As always, if you've got any questions about this, or if you're watching it on demand in person, you can always get in touch with your account representative. You can call the London number 02077264003. Email them at hello@admiralmarkets.com. You can watch these sessions on the youtube.com Admiral Markets page, or have a look at the Admiral Markets Global on Facebook. So there you go, ladies and gentlemen. What we'll do is we'll just have a little quick look at a few charts. Just it's always nice. We always like to see and sort of use some of the things that we've talked about in our session. So if you'll bear with me a moment, we'll just switch across to some charts. There we go. Super. So we'll just let's have a little look at set up a profile, some 4M trading sessions. Let's have a little look at some of the elements that have been going on there. There's been lots happening over the weekend. Of course, we had the G20, the G20 meeting there, okay, which was kind of interesting. That had a fascinating insight on the indices today, where most of them gapped up. We were talking a little bit earlier about some of the American and some of the major equities. Okay, so we'll just have a look. We've got here we have as a case of, let's just this. This is Deutsche Bank here that we have. I'm just going to sort of zoom in a little bit. Zoom out a little bit there. What we've had here is, hopefully you can see that that's been quite clearly in a downtrend, right? From Deutsche Bank, from being, its highs back here just before the crash at 118. We now see we're pushing to new lows here, okay? Just, absolutely new lows. And that's, the monthly chart. You can see it probably just drawn in some of the recent levels that we've been coming down to that are of interest to us. When we go down to the weekly chart, we can see that we're actually, last week we pushed to sort of new lows there, just a smidge under 8, okay, just a smidge under 8. We can see that that's been quite clearly in a downtrend, and certainly this year, okay, well, it's a weekly chart that that has just been in a downtrend. We can see that the moving averages are aligned. We can see that we're making lower highs, lower lows, okay, and that's been providing some great opportunities, especially when we go down to the daily chart. Look at the daily chart in particular. What we've seen here when we're talking about this in our sessions is effectively, what we've seen over these last couple of months is, as that trend has accelerated, we've seen, these are the 3-bar setups, okay, that we've talked about back in earlier, mastering the 4M's trading webinar sessions. So, this one worked very nicely. We were beneath the moving averages. We had 2 green candles followed by a red candle. Not only that, our red candle, okay, was invariably, a red candle was a nice key reversal candle, which is also an engulfing candle. There's also a bit of a pin bar as well. So, we've got a confluence of events there, okay. We've got a 3-bar reversal with, a key reversal at a level of dynamic resistance from the 20 and the 50 in an existing downtrend. And we can see the price just fell away there, back down to the sort of kind of the recent lows down there about 850. So, once again, we set up here. Unfortunately, this one triggered us in, okay, but actually stopped us out. Stopped us out there for a very small loss, but what we also then set up was, we set up there as a sort of a bearish pen bar, which fell away, but unfortunately, we weren't triggered in on that particular trade. But then, what we also set up here was, we set up once again. We had, 1, 2, 3, 2 green candles followed by a small bearish candle at our 20-period moving average. And we were able to sort of get on board that trade and short it down there towards the end of last week. So hopefully that just gives you a little bit of insight. Go from the monthly to the weekly down to the daily. Just looking for, nice downtrends, being able to sort of take on board, just trade them. Okay, just have a little bit of patience, wait for what we're looking for, and actually sort of trade them in the direction that we particularly wish to go. As always, if you want to watch more of this, or if you want to sort of have a little bit more, let's say, timely data or information from myself, well then, every Tuesday morning at 10 o'clock London time, I'm providing the session for the real-time daily trading ideas. That's what we're looking to go through. And this is where, all of the areas that I talk about on these Mastering 4Ms webinars, that's where we actually look at, and that's what we sort of, put them into what I'm looking at in that particular trading arena, and that particular trading idea itself. We can see that if we'll just have a look at one or two other just quickly, just to sort of give us a little bit of insight, we can see that we've had some pretty interesting kind of setups and trades. What we've seen here, for example, with this is the here we go. What we've had is oil. Okay, we've had oil and stuff. I'm just going to quickly, once again, I'm just going to draw the extensions in. I'm going to just draw in some of the particular levels that we've seen and interested from the monthly chart there. Okay, I'm just kind of intrigued to see where we've had particular extremes in trades and behaviors. That's what the fractals help us with, being able to identify some of those areas, going down to sort of the weekly charts. What we can certainly see is that we were in a nice uptrend, then we had a false breakout here, something we'll talk about a little bit in the future. And what we actually saw was that once that we had that false breakout, the pin bar, then invariably you can see the price has just fallen away very, very rapidly. Okay, fallen away very, very rapidly. Now down beneath the 200 and sort of bouncing around. We kind of dropped from around about 75 down to around about 50, so we've lost a third of its price in about 2 months' time. And when we go down to the daily chart, you can see that actually, once the daily chart hit, you can see it very clearly in a particularly nice downtrend. And for those of you who particularly like the sort of 4-hour charts, then you can see that invariably that's just for the last couple of months that has been in a rather nice downtrend there as we've seen the move there. Of course, we had a little bit of a gap today, so we'll be keeping an eye on this for the rest of the week to see if does it fill that gap, or is this a case of a little bit of a bounce up here from that, based upon the news from G20, but also some of the news that's come out of OPEC as well. So there you go, ladies and gentlemen. Let's call it a day there, okay? But as I said, join me on the real-time daily trading ideas, okay? Tuesday, 10 o'clock London time. We'll go through the elements that we talk about in the Mastering the 4Ms of Trading. We'll talk about that in greater depth, and I'll be able to sort of update you on what's possible for traders. I wish you the best of success in your own trading, and I'm looking forward to speaking to you next week for the next session of Mastering the 4Ms of